Hey everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is February 24th, 2013. Our newsletter is for your informational purpose only. We're not responsible for your gains or losses. Let's look at current market trend and our strategy. US stock market uptrend is under pressure. China stock market uptrend is also under pressure. My strategy, I'm currently reducing the long positions. Let's take a look at the major indices. First of all is the NASDAQ index. NASDAQ had two down day last week with a very high volume. On Friday, when they rebound, the volume is very low. And that's a bearish sign. That's an indication that institutions are selling the stock in this market. Mid cap 400, SP mid cap 400. And it looks similar. It also had a distribution day, the two very high volume days, and the rebound day, the volume is very low. SP 500 big cap, seems very similar. The two, well, actually has a 3 distribution days last week and a very low volume rebound. This is bearish. Shanghai Stock Exchange Index, and for the first time since last December, it broke down 30-day moving average, and it's bearish now. FXI 25 Chinese big cap stocks made this index ETF, and it broke the range here, and then rebound to 50-day moving average and came down again. So this ETF is going down. TAO is a China real estate ETF weekly chart. It broke 10 weeks moving average, which is 50-day moving average. Look at here. It broke 50-day moving average, rebound, and then came down again. Very high volume on the down days. This is bad. GLD, it's a gold ETF, and it broke down previous 160 support. Then it came down to 150. This is bearish. SLV silver ETF, it did the same and couldn't make the previous high and came down, and then now came down even more. Let's look at some of the stocks that's being distributed by institution. It's basically the volume is higher in the down days than the up days, or it breaks down 50-day moving average. Do not long those stocks. Let's take a look at the example, some of those stocks. Apple is moving along the 50-day moving average. It's bearish. DDD, it broke down 50-day moving average with high volume, and rebound is very small. And recent peak did not break above the previous peak. So that's a trend reversal sign. The previous uptrend is coming down now. SSYS did the same. It broke down support of 76, 75, this area. Now it's going down $67. This is a high volume come down. On the down days, volume is high. So this is bearish. Let's look at some of the stocks that are still holding up. We introduced to you some of the stocks on the previous Devins Financial newsletter, and those stocks has not yet shown any institution selling. ARM Holdings is still in the uptrend. It did not break down 30-day moving average. It touched it and rebounded. Celgene is making a flat base here. So, and GE has broken out the gap up after earning. Gap up with the high volume here. Now it's holding up. GILD is a biotech stock. It's moving along 20-day moving average. It really came down. LinkedIn reported earning jump up, stock ran up a lot, and during this last week, LinkedIn stock came down a little bit, very tiny. So the indication is LinkedIn is being supported by institution. That's all for this week. See you next week.